All right, guys, this video will be about the relationship between different time frames and how to contextualize trend within the context of different time frames. So right here on the daily, we have a essentially a daily downtrend and a price extension fill. So right up into those lows. Now we have that area marked off, so we'll go down to an intermediate time frame, a 2-hour chart, and take a look at that. Let's see what we got. Okay. So this is a pretty common distinction that will catch you off guard if if you're looking at the low time frames without any context of the higher time frames, and you see this big gap move, right? Whether whatever you want to call it, price essentially it's forming these price distinctions up here. It looks like it's forming a swing, and it'll just shoot through, right, and then retrace all the way up here. So in that context, what's happening is the daily's playing out, and any you might be looking at this as like, okay, well, the you had a downtrend on the 2-hour, the downtrend turned around right here with this area right here, this breaker here, and then starts moving uptrend into an uptrend formation. You can play this level, and then there's a lot of different retracements here. Comes down, tests this area, runs up above these highs. So you may be thinking, okay, well, this trend is going to continue, but then you have this price movement here to just shoot through. This is very important to another reason to always be paying attention to what's going on in the high time frames, just because they will have carryover onto the low time frames, and you want to be managing risk, or at least be cognizant of the possibility of this, right? You don't want to get caught in these moves in the wrong side of the trade. And this is a pretty this is the type of pattern that plays out very, very often, right? People get too in the weeds up here, price comes down, crashes through, retraces into the level. This is the daily lows right here, the bodies of the daily lows, retraces into that level, sells off, enters a consolidation phase, ultimately breaks to the upside. Now let's see if we can find more examples of that. Okay, so right here looks like a good one. Possibly right here as well. So let's go to 2-hour. Go all the way back. Yeah, this is a kind of a similar scenario, right? If you were to do an inverted chart, you would see kind of the same thing we kind of saw on the just the other way around, right? Price, it looks like it's mounting a rally, and then it just collapses. But ultimately it collapses to the upside. Again, that's keeping in mind what the high time frames are doing, right? It's forming this, it's violating these lows on the low time frame, but then the daily just kicks in, and you get the big move up, retrace down. Here's another example here. So it's important to keep in mind when you're trading the low time frames, just to, if you can't trade in line with the higher time frames, just to make sure to manage risk tightly and manage risk accordingly, because when they do kick in, if you're just sitting in this short without a stop, it's not a great move. Also, here's a great example as well. This is the perfect trappy environment for the market, right? Just volatility comes out of nowhere, slams right through. These are liquidation candles that are very, very prevalent in Bitcoin, right? They just slam right through, liquidate a bunch of people, come up, fill the price extension into these lows. This is, roughly into these lows right here, sells off. And this is, people, more pain for people still underwater who haven't gotten liquidated. yeah, it's just typical behavior when the market turns around, right? And there are, a few longs to be had within here, but generally it's just, you see this overlap gap, price extension, run up, overlap gap, price extension, run down. And it's a pattern that plays out over and over and over. It's especially prevalent on like the 15-minute time frame, the 5-minute time frame, just because those are lower time frames and they are subject to the whims of all the higher time frames as well. So if you are trading on those, it's important to trade with that in mind. Anyway, hope you guys like this video. Please make sure to subscribe to the channel, and